Hi, and welcome back again to Tim Bigham's Options and Volatility newsletter. Be taking a look at an iron condor trade, our most recent trade on Palantir. Earlier, we had the put calendar that we closed out for a decent gain. This one with the big drop in Palantir, and finally a little bit of support coming in. We elected to do an iron condor, so let's jump in and take a look. First of all, here's the actual alert. You can see Palantir was lower again. That was yesterday, but finally finding some support. IV actually headed higher post earnings. Earnings came out, had the usual vol crush, but now saw a little pump back on that. So let's take advantage of that jump in IV and the fact that Palantir looks to have finally stopped going down to sell an iron condor, a out of the money call spread and put spread both. So in essence, selling the 180, 185 call spread, 130, 125 put spread for a $1.30 net credit. So that's our max gain on the trade. Max risk is simply 5 less what we receive for it, or 370 bucks per each iron condor. So our return on risk roughly about 35%, right? Do have some nice upside and downside here with Palantir closing right around 156 on Wednesday. Had about 15% upside till we got to that 180 call strike, over 16% downside cushion till we get to that 130 put strike price, right? Using kind of the upside downside break even with that $1.30 net credit. Our upside break even 180, 130, right? Our downside 128.70. That's simply the strike prices less the premium of 130 received. So a little over 16% till we start to lose money to the upside, 17% to the downside. Days to expiration, 30 days, so I have a month out there. We talked about the IV. Here you can see here were earnings, right? See the usual vol crush, but then see this pump back as Palantir and the market generally, but especially Palantir, got hit hard. We saw implied volatility shoot much higher. Here we can take a look at the chart, right? And here's the kind of levels of the put and the call strike prices, right? Do not mind basically getting bearish when it gets up towards that all-time high of 190, right, which lasted for only a few days. But certainly given the pullback we've seen in Palantir, I think a breakout to fresh new highs would be difficult, to say the least. The momentum kind of has come out of the stock, right? And we have a month to go. And then to the downside, 130, absolutely the support level, right? Going back to here. And you can see it was knocking on the door, finally broke out. So as long as it remains between 180 and 130 over the next month, we can profit from the trade very nicely on that. So that's the reason we got into the trade on Palantir. Here's the actual, closing price on it, right? So close right at about what we were looking to sell it for, about $1.30 with a nickel, right? You can see we are positive theta too by a few pennies a day, which means time decay is working for us. So as we said, that's why we got into the trade here. Will it work out? Who knows, right? Because as we always say, trading is about probability, not certainty. But here's a way to take advantage of that big drop and finally some semblance of support in Palantir and positioning at kind of the old highs and support levels, getting paid for waiting on Palantir. So until next time, as always, here's the good trading. Take care.